willing to pay $1,500 a share for Netflix stock, by all means, get it. It's a good buy. You're just not going to be able to pocket any cash off of it unless you sell it. So for individuals who's balling on a budget, living above your means, individuals who, even if you're $200,000 a year, but you're living a $199,000 a year lifestyle, you don't always have that capital to put towards stock and leave it there. You are in situations where you need more money than you're spending, and you don't have enough, and that means you have to cash out on a stock. If you set up a stock where a stock is like the next best thing to an emergency fund, just like I was saying yesterday, where the dividends being paid from your stock could be going into an emergency fund account so that if you need extra money, you could just go there and go grab it where it's easily accessible. That is the most effective way to go. And one of the other things I'm going to tell you before we get started today is that since there are tax brackets for stocks that don't move, because dividend rotation strategy, stocks are moving on a regular basis, they're taxed regularly. Buy and hold stocks where they're sitting there for 121 days, they're not taxed up to $64,000 for head of household and $97,000 for married. If you're trying to get you a standard of living that the government is not going to tax your ass on, you're looking at putting up close to $300,000 worth of stocks to get close to $64,000 a year of untaxed income and still go and make your own do from your working for your boss. Or if you can live inside of the standard of living of that $300,000 worth of stocks, you could quit your job at whatever point that you reach that standard of living and live a stress free life, knowing where your money's coming from, paying your bills 2 months in advance, preparing for vacations, all this, that, and the other, just by investing your money wisely. So I want you guys to follow along and take notes because I'm going to be giving you guys, like Steven said, free money, bro, free money. And I want, and we're going to start off because if you wanted a list of stocks that are set to pay dividends in August of 2025, better yet, what if you knew which ones could offer the biggest cash payouts for the same amount of money? Yep. In tonight's show, I'm not just giving you the key dates to circle on your calendar. I'm also going to run the numbers to show you which of these popular income stocks could put the most cash in your pocket for an identical investment amount. Steven said, I just need to retire, bro. Me too. Shit. I'm trying I want to wake up and have not a damn thing to do besides this podcast. You know, I told myself that this might be my 20-year plan. I'll be doing this down the line and still being able to make it do what it do with everything else. Now I want you guys to follow along with us tonight because this is your guide to potential dividend income for the month of August. Now, first, a quick refresher on the most important terms we're going to be using. Ex dividend dates, for those that you don't know of it, think of it as the deadline and the cutoff to a company's dividends, the payout. You have to own the stock the day before the ex dividend date. Because if you buy on or after that date, the seller gets the dividends, not you. It's that simple. The ex dividend date is the first date that the stock is selling without the dividends included in the value of the stock, which is why no matter how high a stock goes, it'll go down the value of the stock. If there's a 12-cent share, it'll go down 12 cents. If it's 74-cent share, it'll go down 74 cents the day of the ex dividend date. So you can sell it on the ex dividend date, not before them. One of the things we've noticed that since them is going to be this Saturday, the stock closes Friday. You schedule it on Saturday to sell. Monday it'll be sold, and you will be everybody else's getting rid of stock Monday morning, getting the best possible results off of that stock. If you were some of the people that were trying to get as much as possible earlier this week, some people had bought Zim stock last week, or yeah, last week when I bought Zim stock, and then sold Zim stock on Monday and got $230 off of it this past week for just putting up a couple grand, which Few days. You just put the money up there a few days, take it back out, and you get a. But they sold and walked away from the ex-dividend date, where the same quantity of money that they had bought in shares would have gave them another $175 worth of dividends had they held it until Saturday of this week. So you do what you got to do, put money in your pockets. Now, there are other dates, like the record date, when the company officially checks its shareholders list, and the payment date, when the cash actually shows up. The payment date and the ex dividend date are not the same date. But for an investor looking to get the next payment, the ex dividend date is the one that really matters to you. It determines whether you get paid or not. Understanding this is key to building an income stream from the market using the dividend rotation strategy. So let's get into it. Before we get to the stocks, let's set the stage. As we head back, I want you guys to start off by utilizing those reaction buttons. I know they're on like the left or the right side of the screen. Start mashing those reaction buttons as you guys enjoy getting this information in between writing all this stuff down. No worry, I'm going to take my time and throw it into the comment section so you're not going to miss it. But as we head back to half of 2025, the economy is giving income investors both headaches and opportunities, as you've seen the roller coaster ride of the stock market since February. After a stretch of cooling inflation and Fed rate adjustments, the market is in a tricky spot because everything is starting to fluctuate in an increasing fashion. For 2025 economic growth, you have seen this become stronger than ever many people would have expected, especially in the United States. And this has been fueled by a solid labor market and a productivity jump, thanks in part to big investments in tech like AI, with all of the executive orders for plastic. So go get you some plastic, oil. So go get you some oil and fossil fuels and stuff, and tech. So go grab you some tech. But it's not all clear skies because geopolitical tension could still mess with supply chains, which is what Iran was doing, and political debates around things like trades and tariffs could slow things down or bring back the inflation, the way the China US tariffs were interfering with real estate. So, what does this mean for a dividend investor? With interest rates expected to stay higher than they were in 2010, dividend stocks look pretty attractive. They aren't just a defensive move anymore, they're a real tool for building wealth. It actually jet fuels your increase because if you're picking stocks that are increasing in value and you're getting a cash dividend that you reinvest, especially if you auto reinvest, then you have the capabilities to massively increase the principal of your stocks, especially if you're also adding to the stock at the same time. That steady dividend cash can be a great buffer against any volatile market. But you have to be careful because not all dividend stocks are the same. Super high yields can sometimes be a red flag for underlying problems. A yield trap is what those are called. That's why today we're not just looking at any stock paying a dividend in August. We're looking at a mix from stable industry players to high yield specialty finance companies. And we need to look beyond the payout and ask, is the dividend safe? What are the risks? And how does this stock fit into a bigger plan? So the goal is to be strategic and build a portfolio that can handle this complex but opportunistically rich environment. You guys are going to love this. Now, I want to touch on a popular and pretty controversial strategy that is called that dividend capture strategy that we've been talking about since the end of May. The idea is going to sound easy enough. You buy a stock right before the ex dividend date to capture the payout. You hold it until the date, then sell it right after. maybe even on the ex-dividend date itself, depending on what time you go in there and try to get it sold. The goal is to pocket dividends as a quick profit without holding the stock long term. That's what we're doing. Um, One thing I've noticed to enhance your capabilities to receive gains, because if you buy the stock while the stock is inflated, when the stock dips the ex dividend date, you can take a loss, and then the loss will be offset by the ex dividend, which means you would break even. If you buy in usually a few days to a week before the ex dividend date, you can find a dip in the market when you catch it the same way there was 2 weeks ago on Friday, last week, I do believe Tuesday, and then again right now where it dipped again because it just dipped yesterday and it's down right now in comparison to what it was earlier this week because earlier this week it was at 1675 and now it is at like 1635. So now's a good time to get in it because when it goes back up again for Friday, it's going to take that dip on Saturday 75 cents and that's going to be where we're going to sell. So get in while you still can. But this is the method. So I've noticed that if you get in earlier, you can catch it lower, where when it rises from the last minute investors, it'll fall the ex dividend date, which will still be higher than your buy in rate, which means you'll still turn a profit if you don't break even, and you still get the dividends on the ex dividend date. One of the things we discussed last month was in situations where the stock drops too low or you forget to sell, if you have more capital in more places instead of putting all your money into one stock, you can hold that stock until the stock rises and then sell, where you can get the dividend when it was there, sell the stock when the stock is higher than what you paid into it, and then move your money into something else. So if you diversify your portfolio, probably 20% in or 20 or 30% or whatever, divide it evenly. If you got three or four stocks to buy into all three of them equally, and then when it's time to sell, you sell, but you don't have to rush to sell because it will go back up eventually. You can get rid of it and then move the money to something else when something else becomes available because there's always a quarterly stock available every month. And that's what we've been proving since May. It's a different stock every month because it only pays once every 3 months, but we're only going to own it for 1 week out of a month once every 3 months. We're going to move on to another stock. The appeal is clear. It sounds like a shortcut to quick cash, but the reality is way more complicated and full of risks. And that's why we make so much money off of it because high risk, high reward. The biggest challenge is the price drop on the ex dividend date, as I just explained. So a stock's price will almost always fall roughly the amount of the ex dividend itself that just got paid out. And it makes sense because the company is about to pay out that cash. So it's not going to be available. And that's going to make the value drop by that much. If a stock is $100 and it's about to pay $1 dividend, it will likely open for trade the next day at around $99. Sometimes it bounces back, sometimes it doesn't. This means the dividend capture player only makes money if the stock price bounces back to what they paid before they sell, or if you buy at $100 and get the dollar dividend and the 99 dollar value after it drops to $1 and stay there, you made $0, but you don't have a negative. So your $1 dividend gain is canceled out by your $1 capital loss. This is what I want you guys to understand. So even worse, if the stock falls to $98, which that happened with Two Harbors, if people who bought in too late and then sold too late, you might end up actually losing money, which is one of the reasons why I tell you guys pay attention, follow what I tell you, go to get in there when you get in there, and get out when I tell you to get out. And you should see a substantial gain. But instead of selling when it goes down too low, you hold it till it goes back up and then you sell it and you still get the money. Just got to take a couple weeks. On top of that, you have the transaction cost if you're utilizing trade apps that have transaction costs. But there are some fintech apps like Stash App and other such that do not charge you for transactions. If you're utilizing one of those, you don't have to worry about the quantity of cost that it takes to buy and sell stocks, which allows you for unlimited trades. Now, Stash App does offer a monthly service fee for utilizing the app, but it does not charge it per trade. It's just if you have the app and it's active, it's just going to charge you a little bit, $3. That's not a lot of money. If you're making hundreds of dollars a month, $3 is not a lot. You know that's what $150 a year. That's not a lot of money. So Steven said, "Yep, I almost sold late." Yeah. Oh man, Steven got the JKS stock that was paying out almost $2 a share. Man, when I told him about the JKS stock that happened July 2nd, that's what I'm trying to tell y'all. Y'all got to get it when it's there. He's a smiley face business cards. Still not a good idea. I don't see why not, because bitches love smiley faces. Now, then we're going to be understanding that there is still taxes involved because money is moving. Short-term holdings often means dividends will get taxed at the end of the year, and they're going to be taxed the higher ordinary income rate, not the lower qualified dividend rate, as I explained to y'all earlier today. And any profits that you make on those stock sales is also a short-term capital gain, which is typically going to be taxed higher. So you guys will notice that when you go do your taxes, your trading platform should give you some type of 1099 form or some type of something that lets you know how much profit you made versus how much you lost, so that you can claim it on your taxes. And if you use TurboTax, if not H&R Block or somebody like that, you can TurboTax. You can do it yourself, and then get all the deductions that you need to get. And remember, if you're rocking an LLC or C corporation, like I told you guys before, you can get deductions off of the business expenses that offsets the taxation of any capital gains that you got off of stocks in the first place. So if you want to know any information about starting up LLCs or anything like that, you got to go watch some of the other shows that we got. Just go into the search bar on the main YouTube channel and type in LLC or trust, and it'll tell you how to build a trust, how to build an LLC, how to build a C corporation, anything about taxes. We got all kinds of stuff on the show. Michael said, "I'll take a slice of the pie." Now, so the dividend capture is going to be a good way to go, but in some situations, when you start looking at taking losses and paying taxes, it might feel like a total bust. And some of the billionaires might not feel like it's worth their while because they could put it somewhere, leave it there, and get paid off of doing absolutely nothing. Where the rest of us who are trying to build wealth fast will see that as an opportunity for growth. Just note that not always will you see the growth. You will take an L every now and again if you're not doing it right, but it is high stakes games for experienced traders. So for most people focusing on quality companies with sustainable dividends, this is the better long-term play. And that's the reason why I'm doing such extensive research for you guys, is because the stuff that I'm going to be telling you is going to be good for the better long-term play. He said a missed stream and already a troll, bro. No lie, man. You missed you missed out on a lot of stuff yesterday. Now, I know how it works. I want you guys to understand what's going on. This is valuable because it highlights that there's no free lunch in the market, but everybody got to eat. All right, let's get to the stocks because that's what y'all are here for. Hit that like button, subscribe to the channel. Y'all start mashing the reaction button so your friends and family can start seeing this. If y'all know somebody who is interested in stock trading, now's the time to share the live podcast with somebody you know. Tell them get their ass over here with a pen and paper so that y'all can start getting these trades because it starts now. First trade starts this week on this list, and then the week after, and the week after, and so forth, because we're doing all of the trades we're going to be doing in the month of August. And I'm going to be reminding y'all throughout the month which ones we're buying, which ones we're selling, and what the values are looking like. I try to update the list on the tickers that you see going across the screen. I try to update the list frequently so that you guys are aware of what the stock values are. So you're going to be seeing new values come tomorrow. You're going to be seeing new values towards Friday. Um, but I try to update them as often as possible to be as accurate as possible. But since it's not directly linked to the stock market, it is not going to self update itself in real time. So I got to manually go in there and change those. But that is very close to what the stocks were the last time I looked at them. So we're going to cover these in order of their ex dividend dates. And that's why I want you guys to pay attention and write these down. And I'm going to start with a major disclaimer that the ex dividend dates and dividend amounts for August are estimated based on historical patterns. Some companies may not have officially declared their ex dividend dates as of tonight's show. Most of them did because they're coming up like Zim. And the ones that did, you can Google those and confirm the ex dividend dates. But we're going to be giving you some pretty decent hands-on approximations outside of the guarantees. Now, what I also do is I don't just talk about it today, I follow up on it. So later this week, next week, I'm going to be letting you guys know that it is confirmed that certain ex-dividend dates like Arbor Realty is on the 15th. Orchid Island is on the 30th. AGNC is on the 30th. What's tomorrow? The 30th. So you can't invest in it now thinking you're going to get something. This is what we talk about. Um, so if you're unsure, always verify the final date and the amount with the company's official announcements or whatever trading app that you're utilizing at the time so that you can make sure that before you buy into the stock that you have not missed the ex-dividend date, because that would piss me off to miss the ex-dividend date. You don't want to be that guy. You want to either get the date, or if you miss the date, buy into something else, buy into the next one. Now we're going to kick things off with the earliest date share. This is going to be iShare US Treasury Bond ETF. Now, this is the one we talked about yesterday in the stocks that we were trading on yesterday in our portfolio under $25 a share. And I'm going to be giving it to you guys on TikTok and you guys. Well, no, I don't have TikTok. I got Twitch and Twitter because TikTok has yet to be sold. We're going to be following TikTok to see if they get sold, and then I'll let you know. Because if they get sold, you need to be buying you some fucking TikTok stock. Now, this is an ETF. Let's be clear. And I actually think that buying ETFs are a lot better than buying stocks because buying ETFs, you don't have to buy the whole stock. You put up as much money as you can towards the stock, and anything that doesn't fulfill the full value of the stock, you will get a percentage of the stock. Michael said, can I just send you the money you invested and send me the profits? Well, I would love for it to work that way, but see, there's going to be a problem with that because if you send me the money, I'm going to be charged a fee from YouTube. They're going to take half of any money that you give me. And if I invest it and get a profit off of it, then I have to give you back whatever's left. And when I give you back whatever's left, I'm going to end up taking a financial loss. Yeah, that's ironically the cost of doing business. But by me telling you which ones to go to, you can go get it yourself. You don't need a financial advisor. You don't need to pay me. You guys can make money off of the information I'm giving you, and then you could throw me 50 bucks on the channel because you love it. Yeah, exactly. That would be a bad investment if you give me money and then I'm going to take a loss so that you can get 100% of the gains. That'd be a bad investment for me. So I tell you what the information is. You utilize this information, you make your stacks, and if you like the information that I'm giving you, then you guys can come to your YouTube channel, throw me 50 bucks. YouTube's going to take half of that. I'll get $25, and that'll pay for me streaming on Twitter X because Twitter X does not let you live stream for free. Sucks, but it is what it is. So Twitter, all of y'all watching me on Twitter right now, I'm putting in extra effort so that you can get this information because YouTube gets this information for free, minus advertising. Now, uh, this particular stock that I just gave you is going to be tracking the index of the US Treasury bonds. Now, its ex dividend dates is usually the first business day of the month, which should be uh, Saturday. because the day's the 29th, Wednesday is the 30th, Thursday's the 31st, Friday is the 1st. So no, August 1st is Friday. Ex-dividend date will be Thursday. So you've got about 48 hours to buy into the stock. A little less than that because you got to buy into it by 4 p.m. Eastern Standard Time, where the stock market starts at about 9:30 a.m. Eastern Standard Time. Uh, so we're looking at August 1st is going to be the stock. If you buy it before August 1st, you're good. It doesn't matter how many days before the ex-dividend date you buy in, as long as you hold it until the ex-dividend date and then sell. So August 1st is Friday. You buy into it before Friday. You hold it till Saturday, market for sale on Monday. You're good to go. The key word here is going to be safety for this particular stock. And as these bonds are backed by the U.S. government, uh, GOVT is the ticker for this one. It's going to pay monthly, and its dividends fluctuate with interest rates, but it will give you what has been recently seen about 7 cents per share. Now, I know y'all are like, oh, that ain't a lot, but it's a monthly payer. The yield is much lower than others on the list, but you're trading that high yield for stability and low risk. So it's completely unsuitable for dividend capture, but it's a great tool for diversification and capital preservation. So that's the first one that we sell in August. Now, the next one that has the ex dividend date of August 2nd, we have the global shipping giant, Zim Integrated Shipping Service, which is the one that I have been telling you guys go get it, go get it, go get it. Okay. I'm putting this in here for you right now so y'all can see what y'all should be getting y'all hands into. Go get it, go get it. Zim is an international cargo shipping company, and its business is famously uh, selling everywhere, right? When global trade is booming, which we're starting to see an increase of, Zim can be a cash machine. And its dividend policy reflects that. The company's dividends is extremely variable and it has paid out huge sums in the past, but also has suspended dividends when profits fell. So if we stop seeing a lot of trades across countries, we might pull out a Zim stock, but we're not trying to hold Zim stock. We're trying to buy it, get the ex dividend date, and then walk away from it. A recent quarterly dividend was 74 cents per share, and that's what we're looking at for August 2nd. This isn't usually guaranteed, but here in 2025, that is what they're projecting. Zim is the definition of high risk and high reward. Now, for a group of high yield monthly payers that typically have ex dividend dates in early August, we're going to be going through them. Many are mortgage real estate investment trusts or MREITs. We talked about a lot of these MREITs yesterday, but we're going to be coming off of some MREITs that we use on a monthly basis, as well as the ones that we hit every quarter when it's time to hit. Michael says cash cows. Damn right. Time to milk it. Now, Armor Residential. I'm going to give y'all this one real quick. ARR, Armor Residential. I want y'all to write this one down. And before anybody asks, yes, I own all of these stocks. I'm holding them. I'm holding them. And I'm gonna be letting them go when it's time to let them go so I can move the money to something else. Armor Residential is investing in mortgage-backed securities and is highly sensitive to interest rates. So its ex-dividend date will likely be around August 15th, which is a couple weeks from now. And its current monthly dividend is 24 cents per share. Both stocks would have the successful capture by Thursday the 14th, but we're going to be talking about another one because we have uh, Armor Residential, and then we have What is the other one? Uh, Mortgage residential or mortgage realty. Mortgage realty would be the other one. That's on the 14th. But there's two of them, and they're almost exactly the same. And that's one of the reasons why we pull both of those out. But Armor Residential is the one that we're going to be focusing the most on. Now, you're going to capture it by Thursday the 14th. That's what you want to do. You want to get Armor Residential by Thursday the 14th so that you have it by Friday the 15th. This gives you huge dividend yields. It's going to be coming with a risk, but the dividend has been cut multiple times in recent years. So this is the stock for aggressive investors. You will see the profits from it almost immediately. And you're going to be seeing a large quantity of satisfaction because it leaves you with so much room for the next few stocks that we're going to be talking about. Now, in this same group is another uh, mortgage REIT giant, which is AGNC Investment Corp, that just tomorrow in like, well, yeah, it's like 12:20 right now. So tomorrow is in like 40 minutes. Today is the ex-dividend date. Let me give you the ticker for that one. AGNC Investment. You're gonna love this. This one is a monthly stock. It has a competitor. I call it a competitor. It doesn't technically have a competitor, but I call it a competitor because when I'm looking at AGNC at like $9.80 a share, and I'm looking at its competitor Orchid Island, which is like $7.33 a share, I decide which one I'm going to grab, whether I'm doing a buy and hold or I'm doing a dividend capture scenario. It has a similar business model as uh, Armor Residential because it invests in agency mortgage backed securities. The agency's ex dividend date is going to be around the 30th, the end of the month, which on February is the 28th, but it's the end of the month. And it's going to pay a monthly dividend of 12 cents a share, where other REITs that I talked to you about that are quarterly might pay like 34 cents a quarter or 37 cents a quarter, which is almost the same as 12 cents a share per month for 3 months, which is why you've got to look at the differences. So, like Armor Residential, it has very high yields, but it is extremely sensitive to interest rate changes, which can threaten the dividends. Now that the government is coming off of all of those interest rates, real estate is starting to sell, loans are starting to go out. This stock is going to start seeing some fluctuations in a positive fashion. Our third monthly, as I've just mentioned, we're estimating the ex dividend date also on the same day, August 30th, is Orchid Island. This is the competitor to AGNC. I want you guys to make sure that you're putting these down. Let me make sure that I'm putting these bad boys over there on yeah, I'm putting them over here on Twitter X as well. I want to make sure that you guys are getting this. I would be putting them up on the screen. Let me go back and show you guys what we had so far so that y'all see I'm being serious about this for Twitch. You're looking at iShare was first, Zim Stock, Armor Residential, AGNC, and Orchid Island. I want you guys to make sure that y'all write these things down. This is going to be another real estate investment trust with a similar high risk model, but it pays a monthly dividend of 12 cents a share. And this one is the cheapest one to get into right now, which because it's putting out 12 cents a share and it's selling at $7.33 a share, it's offering a 19% return, a 19.8% return, which is the highest return that any stock has currently on the market. Most stocks that have large payouts, like $1.30 a share, might be selling at $106 a share, which is gonna rationalize yourself out to less shares for the same quantity of money, where the higher payout will ultimately balance out with something that is cheaper, where you get more shares, more payout. Now, this is going to look incredibly tempting, but an astronomical yield is almost always a sign of astronomical risk. Earlier this year, that wasn't a smart move because it was on a decline. But Orchid Island originally was selling last year at as high as $19 a share. So now they're selling 733. You can only imagine when it reaches its original value exactly how much you're going to be having in stocks. But that's not where we are today. Today we're doing a dividend capture. We're going to grab it. We're going to flip it. We're going to run from it. But its dividend history being volatile makes this stock for the most speculative income investors, individuals who really want to get in there. They have high hopes, they have big dreams, they have money that they're willing to liquidate. If your risk tolerance is moderate to high, go for it, bro. It hasn't failed me at all this year. I've been investing in it since February, and it hasn't failed me at all this year. I think I've actually grown almost $1,000 extra on the $1,000 I started with since February just from these investments. Now, moving towards the back half of the month, let's look at customer finance with Regional Management Corp. I'm giving you all of these companies, but then make sure that you stay with us because we're going to also tell you guys which ones do you want to put the most focus on for the largest quantity of return for the smallest quantity of investment. Because if you've got a lot of money, you can invest in all of these at the same time. Look at that. I said 733. It's 728 today, but it's 728 today because the ex-dividend date is going to snatch 12 cents off the value. It's going to snatch 12 cents off the value because the ex-dividend date is the 30th. So remember what I told you at the beginning of the show. I said if it goes up high enough and you bought in low enough, when it takes off the ex-dividend, it is going to sell at the opening of the ex-dividend date, and its ex-dividend date is the 30th, which is tomorrow. It went down a little over 12 cents. It actually went down 14 cents. And now that's going to be what it's going to open with tomorrow. So anybody who bought in at 722, you're making a decent quantity of change per share, and you're getting the 12 cents a share. But at $7.28 a share, if you would have bought into Orchid Island last week when I told you, if you had bought into Orchid Island Friday, like I told you, back when it was 706, you know what I'm saying? If you would have bought into it on the 23rd, when it was 706, when it was 708, when it was 710, even though it is 728, which is about 14 cents down from the original 733 that I saw earlier today and yesterday, the fact is that you would still have a 20 cent per share increase on your investment. And if you had 1,000 shares, multiply 20 cents a share times 1,000 shares, you start getting closer to $200. And it's easier to get to 1,000 shares with $7.25 worth of value per share. This is big deals. He said, "Why so big of a drop in February?" Okay, before I go any further with regional management, Michael asked, "Why so big of a drop in February?" Now, at the beginning of the year, Donald Trump had signed the largest quantity of executive orders in presidential history in less than 30 days. A lot of presidents sign 30 plus executive orders within 100 days. This guy signed over 100 executive orders in less than 45 days. And some of those executive orders included tariffs on other countries. Um, and then he also changed the focus from paper to plastic in stocks. Now, the changes that Trump has made cause shifts in the economy. So when he started putting tariffs on other countries, the import export of materials for building houses comes from other countries like Canada, where wood and electricity and other things come from Canada. We get some of our oil from Canada. We also get a lot of our resources for building cars as well as building houses comes from China, where we had and 45% tax on China, and they had 125% tax on us. This increases the cost of building houses, which increase the price for buyers. During the volatile times, the feds were doing maximum taxation on interest rates because they were afraid that nobody was going to pay them back. So interest rates were higher than what they were supposed to be because interest rates were in real estate supposed to trickle back down to 475 or something to that effect by the end of this year. But after what Trump did, it is now banking between 6.5 for the best possible case scenario to 8.5, which is kind of common practice to see 7% interest on buying a house right now, which is slowing down people's ability to buy houses. And because real estate started slowing down in February, the value of the stock dropped. Also, anybody who is successfully rich took all of their money out of the stock market everywhere and put it into gold and silver and other such, which is one of the main reasons why all the stocks started dropping. Stocks were dropping like 700% in April. And while it was dropping, I was buying into it because we can afford it now. The average American can afford it now. He says all the way to $6 per share is that buy Orchid and hold it for 2 years. You ain't got to hold it for 2 years, bro. But yes, you do want to buy and hold on Orchid. But for the dividend rotation strategy, you do want to buy and sell some so that you can take some of your money and move it to something else and catch the quarterlies. Because when you compare holding a monthly stock to holding a quarterly stock pays one time every 3 months and a monthly stock pays every month. If you hold a quarterly stock once out of the 3 months on the day that it sells, you're going to get 3 times more money from that quarterly stock than what you would off of the monthly stock. Because, say, for example, you can get 12 cents a share for 3 months off of Orchid Island. You can grab a stock that's paying 36 cents a share one time and then sell it and then go buy another stock somewhere else that's doing 40 cents a share, do another one that's selling 80 cents a share. And you can do that every month and be making 3 times more money off of the dividend rotation strategy than what you're doing off of holding and averaging 15 to 18% on holdings. But definitely, you want to take a decent quantity of your money and you want to buy and hold Orchid Island and AGNC because those are monthly buyers, monthly payers. You also want to hold ABR stock because that one's going to be a monthly payer. It is higher because that one is like $16 a share, $15 a share, something like that. And so it's significantly higher than Orchid Island or AGNC, but it's a monthly payer. So you want to grab those and hold on to them. And as the stock market rises, when Orchid Island balances out and starts matching the value of AGNC, you decide which one you want to grab. Get both of them. I would. And then when they increase to the values of Arbor Realty, all three of them end up being almost $20 a share. But you've got thousands of shares of Orchid Island, hundreds of shares of AGNC, and a few hundred shares of Arbor Realty. But that should be about 60 to 80% of your portfolio until you have over $300,000 worth of stocks in your portfolio that's paying cash dividends. Because if you have $100,000 worth of stocks paying you 15% interest, that's $9,000 a year. But if you have $100,000 worth of stocks paying you 60,000 a year, you're probably going to have maybe 60 to 80% of your stocks paying dividends in order to make that happen. But then anything above the tax exempt level, you can do growth stocks, you can do dividend rotation, you can do whatever you want to do because you got a certain level of money that is not going to be taxed because it doesn't go anywhere. That's why I say yes, buy and hold. And then the rest of it is going to be taxed regardless. So you can move it around, you can flip it, whatever you want to do with it. That's why I tell you guys, grab this stuff because it is much, much, much useful to you. Cheaper to buy the company, according to Warren Buffett. Yeah, but Warren Buffett's got the money to buy the company. Some of us don't even got enough money to buy a plate of food in the damn company. Some of us watching the channel right now ain't got enough money to pay for parking in the parking lot of the company before we get to the company to get into the building. Some of us will first park the car 20 blocks down the street on the side of the road so that we don't have to pay for parking, so that the money we would have paid for parking, we could pay for it in the building. So while it's good to buy the business, in order for you to buy the business, you got to build up enough wealth to buy the business. Look, now, um, regional management is a company that provides installment loans. So again, another company that is going to benefit from the current fluctuations of the market. Based on its past schedule, we can estimate that this one's ex-dividend date is going to be about the 20th of August, which is 5 days after Arbor Realty. So if you buy Arbor Realty on the 14th, hold it till the 15th, sell it on the 16th, about 1 or 2 days later, the money's going to be available on the 17th. You buy on the 18th and you hold it till the 20th. You just went from Zim to Arbor Realty to regional management and didn't miss a beat with the same stack of cash. This is what I'm trying to tell you guys. And you would get a dividend from each one of them because you had it on the ex dividend date. This is what I'm telling you. He said I can't even afford to watch it. My show is free. Now, regional management is a quarterly dividend and is much more predictable at 30 cents per share. So if you get this one, depending on the price, you would see a larger return than what you would see off of Orchid Island or AGNC. So you want to make sure that you put some money on this one as you move on to the next one. Now, unlike Zim, regional management is about consistency. So for income investors, RM is going to be offering stability in the financial sector. Next up is really close to the chest here because we have a projected ex dividend date at around August 21st. So you are not going to take the same stack of cash and put it into uh, regional management that you're going to put into Cord Energy, which is Cord, CHRD, because Cord Energy is going to be the next day. If you bought on the 18th and sold on the 20th, you would not clear the ex dividend. You would not clear the settlement date until the 21st or the 22nd. So you would not be able to buy on the 20th if you put all your money on regional management on the 18th. So you got to decide which one you want to grab for the one stack of cash. But if you got enough money to get them both, you get them both. You buy one on the 17th, you buy the other one on the 18th, you hold it till the ex dividend date, you sell whichever one comes first, get your money from all of them. Cord is an oil and gas producer focused on the Williston Basin in the U.S. based on uh, uh, history, and the company is going to have payouts both a base and a variable dividend. Now that is going to be attractive. So the payment can be quite large when energy prices are high. Now, we used to see this one where its quarterly dividend is around $1.30 per share, which is pretty high. Now, for a dividend capture attempt, the energy sector will have a little bit of volatility and it's going to end up being a double-edged sword. But you also understand that you will see because of the big beautiful bill that just passed, and then we have all of the pushing for fossil fuels. That they're redirecting themselves away from pushing electric cars. You're going to be seeing stocks like this that are backing oil to be a little bit more attractive. So you want to look into that. But when you follow that, the next stock that you're going to have takes us to Energy Transport, DHT Holdings. Let me make sure that I gave Twitter Cords. Yeah, I did. And then we're gonna grab DHT Holdings and make sure that you guys are writing this stuff down. Like and subscribe. Try to mash those reaction buttons because we're gonna be going into a lot of these. He says, how much stock per share should you recommend? Well, that's an interesting question, Michael. I'm going to be giving you guys an example after I finish telling you guys which ones we're going into so that I can kind of give you guys an idea as to how much you could invest and how much you would get off of that level of investment. But really, it depends on the person. How much money do you have to let go? Because you have to put it into the stocks, you have to let it sit there, do its thing, and then you're going to get your dividends. If you don't have a large quantity of money, ETFs is a good way to go. You buy as much as you can afford to buy, and then you get the value of the ex dividends from the value of the shares that you bought. If you have a larger quantity of money to put away because you don't have anything to do with that money, you can put more money into this, which will give you more money out of it. Um, So that's a very good question. Because the you're asking me how much should I recommend you to put into the stock option, and my question to you is how much do you have? Now, percentage wise, I would put more on them because them has a higher payout. I would put more on Orchid Island because Orchid Island is cheaper than AGNC. I would put some on AGNC, but I would put less on AGNC than I would put on Orchid Island because Orchid Island is a cheaper value and it pays 12 cents per share, the same as AGNC paying 12 cents per share. RM, I would buy that one because it's not impacted by anything. Buying RM in between them and any other stock, I could come off of them, go into Arbor Realty, come out of Arbor Realty, safely go into RM and not miss a beat, and then come out of RM and then go straight into Orchid Island if that's what I wanted to do. But if I wanted to get cord, then I would have to either buy some RM and buy some cord, or buy all cord, or buy all RM, depending upon how much money per share I'm going to get versus the cost per share off of the same quantity of money, which is where I'm going to give that example so that you guys can understand what's going on. Now, DHT owns and I do believe owns and operates its own businesses. It's owning and operating a fleet of massive crude oil tankers. So, like them, this business is tied to the global energy demand. He said enough. Well, that's the thing. So if you got enough, then that means that whatever you have that's available, you want to go ahead get in while you still can. Because this is what we're going to be doing for August. We're still in July for like 2 more days. So you can add your money to your stock portfolio right now, the enough that you have, and then put that value towards whatever you want to put it towards throughout the month of August. Now we can estimate the ex dividend date for around August 22nd, which is a day after cord, which is 2 days after regional management, which means you're not diving into all of these things at the same time with the same stack of cash. But if you put a little bit into each one, you can grab whichever one you want to grab. DHT has a policy of paying out 100% of its net income as dividends, which can lead to attractive but variable payouts. But its recent and most promising payouts that we've seen for quarterlies. The quarterly dividends have been around 15 cents per share, which some people might say this one isn't very attractive. But if I remember correctly, DHT is like a $2 stock, if I remember correctly. So it's like $2 just to change the stock, if I remember correctly. And actually, I could say I could check my ticker because I got it at the top of the screen. No, actually, DHT was $11.12 the last time I looked at it. So 15 cents a share is not that bad. It's almost 10%. Finally, a name everyone knows, Energizer. Y'all be watching that little bunny keep going and going and going. Energizer Holdings. I'm going to give y'all this ticker real quick. Make sure y'all like and subscribe. Make sure that y'all follow this channel on Twitter and Twitch. Make sure y'all write this information down and share it with people that you know. Share it with yourself. That way you can click the link and come back to it later this week. And mash those reaction buttons. I'm not sure which side of the screen they're supposed to be on. Now, Energizer Holdings, the battery company, is a classic consumer defensive stock. Energizer's ex-dividend dates typically in late August, and it has a long history of paying consistent quarterly dividends, currently at around 30 cents per share. Now, we have not gotten the exact date for Energizer yet, but I am going to get it over the next couple of weeks, and I am going to give it to you as soon as I get it. Since the dividends is considered quite safe, you can stake your assets on it, 30 cents a share for Energizer. We just got to figure out which date Energizer releases and then how much is it going to be at that date. We seen Energizer, which is what was Energizer? Oh, I got to go back and say I got a big list. $23 a share. So Energizer was around $23 a share, which is what I was looking at before. And at 30 cents a share, it's a little over 10 cents a share profit. He said 15 cents per share is much better than the bank. The bank is giving you 0.064% interest, which is 6/10 of a penny for every dollar that you put in the bank. So you would have to put $10 in the bank to get 6 cents of profit. Okay. 6 cents per year. So $100 in the bank would get you 60 cents, and $1,000 in the bank would get you $6 a year. Okay. Now, everything that I've been talking to you about today will put a couple $100 in your pocket this month. You buy it. Look now, that's the bank doing it to you per year. I'm talking about you buy it, couple $100 gets paid to you, then you sell it this month. And if you're following the dividend rotation strategy with us all month long, well, all year long, you'll come to see that a few good trades a month and you're making over $1,000 a month worth of trades, which puts you at almost $12,000 a year worth of profit off of the same stack of cash all year long, which is, as projected, over 168% return before taxes. Now that makes sense. Now, for the income investors, Energizer is a rock of stability. It's not a great candidate for dividend capture because of its low volatility, but it's a stock that you own for reliability and cash payments. So if you decide not to use this stock as a dividend capture stock, it is still a good stock for you to buy and hold for regular cash payouts. Because remember, money that's not moving, tax exempt as long as it's under $64,000 for head of household. And the reason why I'm saying 64,000 for head of household is because they got three tiers. They have a lower tier for single, they have 64,000 for head of household, and they have 97,400 for married. Now, assuming you don't want to get married, if you have anybody that depends on you, uses you, benefits from your resources that are in your house, you're a head of household. Period. You got a couple friends crashing on your couch more often than not, you're a head of household. You got roommates, you're a head of household. You're in a relationship, y'all just dating, you're head of household. You got kids in the house, you're head of household. Your in-laws are staying at your house, you're head of household. You're taking care of your mother and your father, you're head of household. Single is when you live alone, nobody benefits from your assets, nobody uses your assets. You do not have to put money into anybody else out of your paycheck. That is single. If that does not apply to you, stop applying single because you're fucking yourself in the ass. You really need to be applying head of household. So head of household 64,000 a year, and then married 97,000. So if you ask yourself, well, what do I get as a dude for getting married? That extra 30,000. That extra 33,000 a year of tax exempt money. That's what you get out of marrying her. And that's her cut. Because men pay an extra 41%. So that's her cut. That extra 33,000, that's her cut. So which of these stocks are going to be offering the biggest cash payout for the same amount of money? Michael was asking, what are we going to put in and what are we going to get out? So let's take a hypothetical $10,000 investment. We're going to see how much each stock would generate from a single dividend payment using the recent prices. Well, actually, when I grabbed this script late last week, this is going to be different values, but hypothetically, under these values, we're going to be giving you guys kind of the rundown because this is what the stock was when I put this information together, but I didn't take the time today to update the values of the stocks for this particular example. So this is a hypothetical, but you can crunch the numbers yourself with the current stock values, and you will see that this still applies. And actually, the payouts might be a little higher. Michael said extra 33,000 and a headache. Yeah, I don't know about that, bro. It's an extra $33,000, a stroke, a heart attack, 2 aneurysms. It's like passing a kidney stone. It's like passing a kidney stone the size of a grapefruit. That's what it's like. You talk about a headache. So I'm going to tell you guys one more time. This is a snapshot in a time. Uh, this is a snapshot in time that's going to illustrate the concept. This isn't the actual values that we were talking about earlier today or the ones that's going across the screen. This is a hypothetical when I first originally grabbed this information last week when I told you guys I'm going to give you guys the rundown on how to move these things around. So starting with the safety play of iShare US Treasury Bond ETF at a price of $22.70 a share when I was first looking at it, a $10,000 buy-in would get you about 440 shares. With a monthly dividend payout of about 7 cents per share, your cash payout for August would be about $31.24. Now for Zim, the wild shipper, Zim's integrated shipping with its stock price of around $15 a share, $10,000 worth of buys, you would get a whopping 667 shares. With a quarterly dividend of about 74 cents per share, that's a massive cash payout of about $493.33. This shows the power of a huge dividend on a low price stock, which is why I always encourage you guys to chase the low price stocks with the high stacked dividend payouts. Now, let's bring in the monthly REITs. We'll start with Armor Residential. Armor Residential at the time when I grabbed this was about $16.50 a share. Now it's a little lower, it's closer to $15.30. But at the price of $16.50, the dividends were 24 cents a share. $10,000 worth of stock would get you 606 shares, and your cash payout for August would be about $145.45. Now that it's about $1 cheaper, you're looking at potentially getting another 5 or 10 shares off of $10,000. Well, actually, it's $1 cheaper. You would shave a $600 off of the total price, and that would get you, help me out, guys, probably 20 or 30 shares, which at that point would put you closer to $165. Now, let's run the numbers for AGNC Investment Corp because AGNC Investment Corp was around $9.25 the last time I had looked at it before I did the script. It's going to be a little bit higher right now because the ex-dividend date is in the morning, but $10,000 worth of shares for $10,000 buying into this would get you 1,052 shares. 1,052 shares would get you about at 12 cents a share, $129.73 for the month of August. Notice that you're putting up $10,000 and you're moving it around to most of these stocks, and you are drawing back more money in a month than what you might have would have got in 10 years. Because remember, I told you $10,000 could get you $6 in returns from the bank. He said 100 shares at $15.30 times 24 cents, $165 per month. Did not do the math. Did not do the math. I crushed those numbers in my head. Like, look, it should be really close to 165. This is what I tell y'all. I'm almost never wrong. I have not found a situation where I have done it wrong. But make sure y'all like and subscribe as I give y'all the rundown here. Now, The stable consumer that we're going to be looking at, regional management, the last time we looked at it was around about $32 a share. It's got the quarterly of 30 cents a share. You're buying this one because this one's significantly higher. You're looking at $312 a share. And that one would generate you a payout of about $93.75. Next, we had Cord. A while back, it was $105 a share. I didn't like it, but I liked it. I wanted to tell you about it. It's giving you $1.30 a share. So $10,000 worth of Cord would give you 95 shares. At $1.30 a share, it's giving you $123.80. Not nearly as much as some of the other ones that were paying out. The stable Energizer battery at $23 a share when I first got this information with a 30-cent per share payout. $10,000 worth of shares gives you roughly 434 shares, and this one would give you a cash payout of $130.43, which is ironically better than the $1.30 dividend from Cord because of the buy-in value of Cord. And this is one of the reasons why I tell you to pay attention to the dividend distribution versus the cash buy-in. And even though Energizer dividends per share is lower than Cord, I want you guys to understand its lower stock price means you can buy more shares, resulting in a bigger total cash payment in this comparison. So let's recap. $10,000 would get you $389.24 of Zim stock. AGNC, Arbor Realty, and Orchid Island would each give you, in order, $130 for AGNC, $145 for Arbor Realty, $170 for Orchid Island for the same $10,000 rate. If you were looking at this in a quarterly, it would have given you $390 for AGNC, $425 for Arbor Realty, and $510 for Orchid Island. So if you compare that to the quarterly payout of the $389 for Zim stock, it is cheaper to buy and hold AGNC. Well, actually, no, you're gonna get less money off of buying and holding Zim stock for 3 months than what you would get off of buying and holding AGNC for 3 months. And that's the reason why we do the dividend rotation strategy. Because instead of buying and holding Zim stock for 3 months, we buy it, we get the 389, we sell it, we run, we hold AGNC, we get the 390 off of the quarter. Wow, we're getting 3 times more money from each other stock that we play with, which is giving you a 75% inflation. Energizer, like I told you before, a solid $130. DHT, $139, which is ironically more than Energizer. Regional, a lot less, giving you $93.75. Cord is giving you $124, which is the second lowest one because the ETF, the government treasury bond, gives you $31.24. Oh no, he says minus service fees for those people who are trading on platforms that have buying and selling fees. There will be service fees for making the trade. You're still making more than a bank. But if you're trading ETFs, like off of Stash App is one of those things that's trading ETFs, which is the cash value of the stock, and they're not charging you service fee. They charge you $3 a month, which is not nearly as much as what the bank charges you for an NSF fee. And the fact is that ETF, you're going to still get the X dividend, you're still going to get the cash value, you're still going to do the buy and holds, but you can trade as much as you want and you don't have to pay per trade. Unlimited trading every month for $3 a month to hold the platform. Makes sense, right? So hundreds of dollars a trade and no cost to trade. It's not $3. $3 for the 30 days that we just made almost $1,000. I think that's worth it. So the profit that you make off of the $3 you paid for the month and the $1,000 that you made off of the trade, you walked away with $997 worth of profit off of using Stash App to hit each one of these trades unilaterally. So Michael's right, but that's still way more than going to the bank. Way more than going to the bank. And this dividend rotation strategy is way more than buying and holding, because buying and holding, you would see 15% average over the course of a year, where if you put $10,000 into stocks for 12 months, you would probably see $1,500 in 12 months, where I just told you that in 1 month, you could potentially walk away with $1,000 from that month. And if you can be successful with that type of trading every month, you might walk away with close to $1,000 every month, which means you might get close to $12,000 out of the year off of moving $10,000, which is more than 100% return on your investment, because you would have made back the 10,000 you started with. You still got your $10,000 principal, and you got a little bit more on top of it, probably a couple $1,000 more than that. Start with 10,000, end up with 22,000 in 12 months. I can't argue with that shit. That's not exactly 168%, because 168% would, you would put up $10,000 and you'll walk away with like $25,000. But that's still damn way better. 100% return is way better than 75% return, is way better than 35% return. And this is why people don't pay attention to where money is going. This is why I'm like, bro, instead of going to the bar and spending money at the club, I need to be putting my money in the stocks. Instead of buying dinners for these chicks, I need to be buying money, put money into these stocks. Instead of these females paying for dude to not be successful with himself, I need to be putting money on the stocks. That's what everybody should be thinking, because y'all just sat here for an hour 25 minutes and just found a way to make you $1,000 by using the phone, using your cell phone for 20 minutes out the month, out the whole month. That's it. And that is more money than a lot of people's paycheck, believe it or not. Michael said only poor people say money won't make you happy. And poor people never had money, so they don't know. Now, the numbers are crystal clear. So if your only goal is maxing out cash flow, Zim is going to be the undisputed winner for this month. But this analyst is meaningless without hammering home the risks. So the stocks with the highest payouts are going to be Zim, AGNC, Arbor Realty, Orchid Island, and those are going to be the ones with the highest risk. Um, this isn't about finding the best stocks. It's about finding what's best for you and your goals and your tolerance levels. So the highest combination, and this is going to be what I'm going to tell you, the highest combination of stocks to grab without failing on transitions. And actually, now that I think about it, I could throw regional in there because it doesn't mess with anything, but it's not as high as the other ones. First one is Zimstock, Arbor Realty, DHT, and either AGNC or Orchid Island for a dividend payout of a total of $802 if you go with AGNC, and $842 if you go with Orchid Island for the end of the month. At a calculated amount of about 8.5% return for just the month. This type of trading is between about 32 to 34% APR over the year for just this quarterly trade. So only making this type of trade once every 3 months, 4 times a year, you're getting a 34% return. But if you're making $840 a month every month for 10 months, that's $8,000. If you're doing that with $10,000, you almost made $10,000 back. But this is just for the quarter, because remember, these are quarterly trades. Next month, we're going to be talking about what we can make off of September, which is going to be different quarterly stocks than the ones we made off of October. So the percentage yields are going to be a little bit different, but it's still going to be more than 15%. So remember when I told you guys about leveraging cash loans that are anywhere between 5 and 9%, and you're doing 34% trades, You leverage cash loans towards your stocks. Use a cash loan, buy what you want. You're paying back 8% until you pay off the loan, but you're getting 34% off of dividend rotation strategy. So you can drop 10% of that onto the loan that you just got and pocket 24%. And you're still making more money off of spending money and paying off the loan than what you would have been making on your daily job. And that percentage difference is still higher than what you would have made off of a bank, higher than what you would have made off of a CD, higher than what you would have made off of a treasury bond. Just wanted to throw that out there. Higher than what you would have gotten off of a IRA or 401k, more money than what you would make off of Social Security disability, more money than what you would make off of your veterans benefits. I just want y'all to understand. And all of this is going to be trading with only moving $10,000 around one time. This is one rotation between these stocks. So if the breakdown is helping you guys connect the dots, I want you guys to do me a quick favor and make sure that you hit the subscription button if you haven't done so. Turn on those notifications, hit that notification bell on all of the shows, and I don't want you guys to miss the upcoming ones that we have. Um, he said, "Did I hear about the earthquake?" No, I didn't hear about the earthquake. Explain to me, Chris, what happened with the earthquake? Because we were talking about money today, but here on this and that, we talk about this, that, and everything in between. What happened with the earthquake? And please let the earthquake be an actual earthquake and not an inappropriate side spin. So I want you guys to understand as we move forward, I want you guys to understand that if you've got questions, make sure that you ask them. But I've got a question for you guys. Which of these stocks is on your watch list for August now? I want to know if you guys are going to be chasing Zim because you got to get Zim right now because it's going to be gone. Oh, 8.8 magnitude in Hawaii is they're evacuating. I don't think any of our investments are investing in Hawaii, so I don't think we're going to be seeing a dip in our investments as a result of Hawaii being destroyed by earthquakes and volcanoes. So our stocks are safe. I know, Chris, that sounds a little bit heartless, but yeah, society dictates how our money moves. Natural disasters like the floods and fires in California earlier this year caused the was a massive contributor to the decline in the stocks because all of the real estate was destroyed and then they had to rebuild it and the money that they put into rebuilding it came out of the investors' pockets and that reduced the values of the shares because investors backed away because nobody's getting what they were supposed to be getting. You also have political disarray that shifts the way things work when Elon and Donald Trump parted ways, and the big beautiful bill stripped away the tax credit for Tesla. They now come September, Tesla's not going to be the flagship electric vehicle thing that it used to be because it doesn't have that $7,500 tax credit. So more people are going to be leaning towards gas cars since electric cars cost $20,000 to $30,000 more than gas cars. So it's just a big difference. Special shout out to Rooterus. Good to see you again today. That have you spoken about the Blackstone CEO assassination yesterday in New York City? No, I did not. Actually, instead, I was talking to you guys about how to put money in your pocket using the dividend rotation strategy by letting you guys know which stocks that you can buy into, where Zim stock is the most recently one going to be bought and sold because the ex-dividend date is going to be on the 2nd, which is this weekend, Saturday. So you got to buy it by Friday because my goal and I love to cover things. I don't mind covering conspiracies. I will never forbid anybody to come up here with any type of uh, conversation about anything. I know people come up here and try to talk about Epstein's list and Puff Daddy and all this other stuff. And I mean, yeah, I can talk about that. But the largest majority of people came to the show to try to get them some stock information and put money in their pocket. My goal is the reason why I didn't cover the Blackstone assassination is because the Blackstone assassination does not impact my stocks. That's why I didn't cover it. My goal is to help the average American find other ways to make legal money and put it in their pocket so that they're no longer required to work on a job that they hate, be talked down to by other individuals. I appreciate you for coming, Chris. Thank you so much. To sacrifice their personal life for their work life, working till they die. This podcast helps men become higher value men so that you guys can become more successful in your lives. You can probably find you higher value women. Women can take this information and become higher value women because instead of you depending on a guy that's not worth it, you can trade for yourselves, invest for yourselves, build your own legacy for yourself. Where, like women say, you don't need no man, or if you found a man, he's got good investment ideas where you're not getting a guy because of his money, you're getting a guy because of his investment ideas, which will allow him to grow his wealth and your wealth so that y'all will be wealthy together. Because I've given you guys information on how a couple where each one of y'all is making about 50,000, 55,000 a year can come together living on a less than a $55,000 a year lifestyle where you could take the other 40,000 a year that you don't need on the house and put it towards stocks and make you guys millionaires within 10 years. I give you guys information on how if you spent your money wisely, you don't got to struggle to do it. You just got to not be wasteful with your money and you will find a way to put so much money away that y'all can quit y'all's jobs. I talk about this heavily for the working class because machines are going to take over manual labor positions. You're going to have a harder time between unions and robots finding a replacement job when you do quit or get fired from your current job. If you don't have a tech degree, or some type of engineering degree where you're going to either be working on software or you're going to be rebuilding the bots until the bots rebuild themselves like the Matrix, you're going to have a hard time finding a new job. Anybody who's worked on manual labor jobs know that you cannot change fields as easily because if you're good with your hands, you're good with your fucking hands. When you go from being good with your hands to being good with your brain, you've got to have years of experience. And if all you have is years of experience of being good with your hands, when your back ain't good no more, when your knees and your ankles ain't good no more, you need something else to make money for you. And that's not uh, I I'm not even gonna sit here and say my condolences to the guy that got shot because I mean truth. I believe that we should focus on our own money. We should work on nobody has seen a podcast, a seminar, a class in high school or college that will teach you how to fix your budget, fix your decision making on spending, invest, save, and stop worrying about rich people who make so much money that you're never going to go to that guy's funeral. Who's gonna be? You're gonna see that CEO's funeral on TV and be like, "Oh, damn, that sucks." But you know what? Chris could have came to the show and gave us a more meaningful announcements like, "Did you know Hulk Hogan died at 71 on Thursday?" That is something to freaking talk about. While Hulk Hogan doesn't really impact my investments unless you're buying TKO stock, which is now the owner of WWE, then technically doesn't really matter. But Hulk Hogan is a household name. Chris didn't even know the CEO's name. He's just like, some guy who has a CEO position at Blackstone, he got shot yesterday in New York City. That's like saying somebody in my neighborhood stole rims from somebody else. It's like, bro, this stuff happens. In America, what we got several million people that get shot a year. And actually, from what I understood, the correct statistics is supposed to be something to the magnitude of about 30,000 or so people that get shot and about 40,000 or so people who die from falling. More people die from slip and falls than people that get killed from shootings. And 50% of the people who get killed from shootings are suicides. So when you then tell me about the guy who got assassinated, the only thing I'm going to say, as heartless as it is that he did something to somebody that they did something to him. That's one of those he had it coming kind of scenarios, believe it or not. Because one statistics have shown that crime of passion, typically what happens, revenge, typically what happens vendettas that have not been resolved. Typically, what happens when crime between people who know each other, people who affiliate with each other, people who do business with each other, tend to have violence. So, whoever assassinated the CEO or whoever paid for the assassination of the CEO didn't want the CEO to be the CEO anymore for whatever reason. Now, I'm not going to go down a rabbit hole of trying to investigate why that is. We came to talk about stocks. We came to talk about investments. We came to make money. And that's what you guys got to do when you come. And by all means, you can come to the show like Chris did. Special shout out to Chris Samuels. I want to give a special shout out to him again. He could come to me about the earthquake in Hawaii, but I don't live in Hawaii, so I didn't know anything about the hurricane. I mean the earthquake. But if you come and tell me about the earthquake, I'm not going to be empathetic to an earthquake because I've never been in an earthquake. I've been in a hurricane, I've been in a tornado. I can say that I've come really close to experiencing a blizzard, but I've never been in an earthquake. So how do I express genuine empathy for something I've never experienced? I've been in natural disaster before. I know what it's like to be in a city that has no power for 3 months. I know what it's like to go to work every day with water up to your knees. So I can relate to the people in the Philippines. But I don't know what it's like to have a volcano erupt and almost wipe out my entire neighborhood. I don't know what it's like for an earthquake to occur that swallows my house up. So all I can say is, damn, that sucks. And you might say that's heartless. You might say that's heartless. But I'm going to be honest with you. I would prefer to be genuine and tell you the truth about everything that I got going on than to pretend like I give a shit about something that I otherwise would not give a shit about. Now, am I the kind of person that would see a car in distress on the side of the interstate and at 120 miles an hour bring my car to a stop and go check and make sure that they're okay? Yes. But am I going to join a Greenpeace crew to go over to Hawaii and go and try to do some refugee stuff over there? No. My assistance is limited to the direction of travel that I'm currently traveling. That's how it is. And most of us are the same way. A lot of us will not go and find homeless people and pay for their standard of living. But if we pass a homeless person that's holding up a sign while we're in traffic, if we got enough time to pull money out of our pocket to hand it to them before the light turns green, we might give them a few bucks. If we ain't got nothing, we don't have that much to do and we're standing outside of a restaurant, we just bought ourselves something to eat, we might go back in and buy them something to eat. But will we literally spend half of our day like a soup kitchen cooking mounds of food to go and feed the homeless people that we know live in our neighborhood? No, because we don't give a shit. We care to a degree, but we don't care that much that we're going to make change, because if we were going to make change, there wouldn't be homeless people. If we were going to make change, we would have a society built on communism, because communist model is just like the Star Trek model. Everybody has what they need. Everybody has something to do. Nobody has to worry about resources, but there's also no requirement for capital transactions. We don't live in that kind of society. Capitalism is just that, capitalizing. You make money off of stupidity. When somebody does something they're not supposed to do, you make money off of weak people, people who don't have the capabilities to perform, so they pay somebody else to do it. You make money off of the elderly, the lack of knowledge, the lack of physical strength. You make money off of the ignorant, the people who don't know no better. Now, I can't do nothing for the other three, but I can definitely make sure that if you like and subscribe and come to this channel, that your ass won't be ignorant. You will know what you need to know so that you can buy what you need to buy, sell what you need to sell, invest in what you need to invest, save what you need to save, and not waste money on bullshit so that your life can stop sucking. Because there's two halves to this podcast and there's two halves to your life. One half is how your money is not enough and you're stressed out about finance. And the other half is how your personal life is full of chaos and you don't have enough peace in your personal life to figure out how to put more money in your pocket so that you can stop being stressed out about money, but you don't have enough money in your life to pay for enough peace in your life so that you can think about how to put more money in your life. And that is the complete yin and yang scenario that most people struggle with. So I'm going to help you out. Monday, Tuesday, and Wednesday, I tell you about ways to put more money into your pocket. So if you wasn't thinking about that because you work all day, you come home, you rest a little bit, you watch social media, you come see me, you go, your wife is wearing your nerves, your husband's wearing your nerves, your kids is wearing your nerves, your best friend's wearing your nerves, your family's wearing your nerves, then you go to sleep, you wake up, you go to work every day, you don't have time to think about an alternative solution. I'm gonna give you an alternative solution about your money. Then decision making process is Thursday, Friday, and Saturday. So when you come and talk to me on Thursday, Friday, and Saturday, you tell me what's going on in your personal life. You can do a hypothetical. You don't got to name names. You can just do a hypothetical situation, and I can navigate you through it because we've been navigating all kinds of relationships, marriages, long distance, social media dating, all of this other stuff, communication, the lack of communication, ways to spice up your marriage, ways to build trust, all of the stuff that people don't talk about. You guys are spending $200-300 an hour for a therapist, and you can come here and get the same shit for free 7 days a week. And I'm giving you the same. I'm giving you better information than a therapist would have gave you because a therapist is going to be like, well, it doesn't work. You break up. But I'm like, no, y'all need to work this shit out. Think about the money. Don't think about the children. Fuck the children. The children are a crutch. Think about the money. The children are an asset and a liability because you can use the children as a tax write-off because they're a liability. These are the things I want to tell you guys about. Y'all got kids. If y'all wasn't here earlier this year, I'm gonna tell y'all right now. Instead of paying for private school, donate money to the public school, get a voucher for it, write it off on your taxes, which means that every dollar you give to the public school is less money you got to give to Uncle Sam at the end of the year, as opposed to not having enough money to give to the private school where they're threatening to kick your kid out, treating your kid like shit, putting your kid on some kind of financial aid program and have your kid being picked on in private school. You could be balling out of control with a public school because if you can afford to give them $400 a month, they will love you as opposed to a private school that's like $1,500 a month. And they're like, oh, that's not enough. You still got to donate on top of the tuition to be somebody. You know what I'm saying? And if everybody invested in public schools with the Department of Education closing at the beginning of this year, everybody investing in public schools, the limited budget that schools have, which is a nonprofit entity because they get funded from the government, they spend the money, they don't have any money left over, and whatever they don't have left over, they can't give to your kids. Instead of you sending your kids to school to get the free lunch, you need to be investing into the school so that your kids get a better lunch. That way they can probably get lunch and dinner. These are the things that I talk to you guys about on the show, which makes your life better. So when you come here, you're going to learn how to make money. You're going to learn how to invest it, save it, put it away. Because when you start making a large quantity of money, you want to start establishing trust, probably overseas. I gave you a bunch of countries you can go to get non-residential trust in tax exempt countries where if you're the beneficiary of a trust that does not have taxable income, you do not pay taxes on that money, which means that it is not a taxable income when you get it, which means you don't have to claim it on your tax return. These are the things that is public knowledge that nobody knows about. These are the things that the good old boys tell their kids. They groom their kids from youngins on how to make, save, and invest and network to keep the money in the family, right? And then after they do that, the ones that are the most responsible stay in the will. The ones that are the most responsible stay on the payroll. The head of household is the person over all the money. You see that even in Asia. The head of the family is the person in control of the generational wealth. Everybody who wants to get money from the head of the household has to follow the instructions of the head of the household. And I don't understand why the women in America don't understand it. If you want to be the head of the household, you got to pay everybody else in the household. If you want to receive money from the household, you got to listen to the head of the household. If you don't want to follow instructions, you're going to have to be on your own. But being able to build wealth from living from paycheck to paycheck, being able to, right now, real quick, how many people in the podcast right now are living off of 30% of your income? Okay, so since I'm probably the only person here, well, Michael is too, that's living off of 30% of your income. If you're not living off of 30% of your income, you're supposed to be doing two things: reducing the quantity of unnecessary spending investing more money in the stocks and bonds and real estate so that you can have more money to spend, making extra money somewhere if your primary job isn't paying you enough money, and then investing more of that in stocks, bonds, and real estate so that you can generate enough wealth from stocks, bonds, and real estate so that you can have a second or third income that will come in to give you 3 times more income than what you did have so that you can now be living off of 30% of your income. If you're living off of 30% of your income, think about this real quick. Anybody who wants to finance a house, first thing the loan agent looks for is that you're spending less than 43% of your standard of living. So even the mortgage broker is going to tell you that you're supposed to be living at 43% of your income to buy this house. Um, Landlords tell you you got to make 3 times the rent. 3 times the rent is 33%. So your landlord is telling you you've got to be living at 33% of your income in order to rent this apartment. Even in a shitty neighborhood, you've got to be living at 33% of your income in order to rent this apartment. And that's stupid because in America, like 60 to 68% of your income goes towards your rent or your mortgage. But they want you to have 33% of your income be the cost of your rent. So no matter what you're doing, everybody's hinting towards it, but nobody's teaching it to you. I'm teaching it to you. And I teach it to you every day. I teach it to you 7 days a week, 365 days a year. We do not let the sun rise without going live. That's why I tell you guys to like and subscribe, hit the notification button, because as soon as we go live, you will get information about exactly what you didn't know. And that's better than Wikipedia, because instead of you just randomly scrolling through the internet, what if, what if, you come to this podcast like, oh shit, I didn't know about that. And now you have a specific question to ask when you take yourself to the internet and say, hey, what about this? Xander said this. Is it true? Yes, it is. How does it work? Oh, snap. And that helps you become better. That helps you become more efficient. Because a lot of the times, it's not that we don't want to improve ourselves. You can't change if you don't know change is needed. And then when you know change is needed, you can't change if you don't know what to do. So, how do you ask the right questions if you don't know what questions to ask? It's not possible. So, in order for you to ask the right questions, somebody has to give you initial information that you then want to follow up on. That's where it all starts. Opportunity comes from word of mouth. You're not going through life with a bunch of doors on the street that's like opportunity here, opportunity there. No, opportunity comes from word of mouth. Somebody knows that their job is hiring. They know that you would be a good fit. You're looking for a job. They tap you on the shoulder and say, hey, my job is hiring. Somebody knows somebody that's looking to buy a certain product. You know somebody who's selling that product. You might tell the person that's buying, hey, I know somebody who sells that. A lot of y'all do that with the weed thing. But you got the other guy who's selling it like, hey, I know some people who will buy that. Networking. Notice most apps, most platforms, brick and mortar platforms, internet platforms, they do referral things, word of mouth. If you share whatever product to all of your contact lists, if somebody signs up and potentially spends a certain quantity of money over a reasonable period of time, you will get so much money per person up to a certain amount of money for that particular promotion. So by you advertising for them to your network, they make more money off of long-term membership. You get a quick fix on each person that signs up. Networking, word of mouth. So all the information that I'm giving you guys on stocks today, all the information that I'm giving you guys about investment opportunities yesterday that y'all need to go back and watch since y'all wasn't here yesterday, all of the information that I give y'all about investing in Puerto Rico tomorrow, y'all need to be paying attention to that, because this is the kind of stuff that y'all did not know existed, the way I did not know that Hawaii had an earthquake. But I'm not going to lose no money off of Hawaii having an earthquake. You will lose money on not investing in these stocks, because all the money that you could have made this month, where I just told you there's like $900 on the table to be made off of 4 big trades. There's $900 to be made, where you buy it one day, sell it 2 days later, and you made a shit ton of money 4 times. That's all of 2 minutes per trade, 4 times out of the year. The rest of them could be buy and holds, and that means that you're probably spending less than 10 minutes out the year to make $1,000. How many people can say that they can make $1,000 in less than 10 minutes? Nobody, right? Most of y'all are making $18 an hour or less. Now, when you think about how you can make $1,000 in less than 10 minutes, or make $18 an hour or less, to get that $1,000, you might have to work 65 hours. You might have to work 80 hours to get that $1,000. Where after they take the taxes out, you just did get 900 for 2 weeks worth of work. Where I just told you how you could have made that $1,000 off of 10 minutes worth of trading. Now, when you think about day traders aren't people who trade every day. Day traders are people who will make a trade, at least one trade every day, or once a week, or they're looking at the stocks every day and they're making a trade when trades are necessary. But these guys might spend 2 to 4 hours a day every day looking at the stocks, and then they'll set up certain trades that are relevant. Then they walk away from their stocks and they have 20 more hours out of the day. Where if they take 4 to 6 hours, or 6 to 8 hours out of that to sleep, you've honestly taken 10 hours out of your day to sleep and move your money around, which gives you another 14 hours to live life. No responsibilities, no obligations, 14 hours a day, 7 days a week to live life. And actually, it's more than that, because you're only trading from Monday to Friday. So you get an extra 4 hours a day on Saturday and Sunday. So do you understand the life of a retirement that is paying you stocks, that is paying you cash, that is giving you the kind of dividends that a lot of people don't know exist? Y'all come to the show, y'all gonna find something. Y'all gonna see something like, some of y'all are gonna get verified, validated, meaning that you were thinking about it, you saw it, you were looking at it, you wasn't sure about it, then you came to the show and I confirmed it. Some of y'all are gonna get new knowledge. Y'all didn't even know it was like this. And the average broke person, and I'm gonna talk to y'all real quick. The average broke person, think about it like this. What we said, Orchid Island, $7 a share. That's cheaper than a pack of cigarettes. AGNC, almost $10 a share. That's also a pack of cigarettes in New York. Uh, Arbor Realty is like $15 a share. That's a case of beer. Now, think of how many cases of beer you buy in a year. Think of how many packs of cigarettes you buy in a month. And think about how many stocks you could have bought instead. We're sitting over here talking about $800 worth of profits coming back to you, but think about $250 a night, 3 nights a week at the club, right? Almost 750 to $1,000 a week at the club. Yeah, you living a life. YOLO, right? But you think about that $1,000 a month that you're throwing away at the club to have a good time, that's like 12,000 a year that you're throwing away every year, where I just told you how you could take that 12,000, turn it into 24,000. Using this exact same strategy that we were talking about today. A lot of y'all finance y'all brand new cars so that y'all could show out when y'all could have bought a cash car and own one. If y'all were watching a show a few weeks ago, I told y'all how one of my cars broke on the interstate. I towed it back to the house, which is 10 minutes down the street. And then we took the other car that was sitting in the yard, put it on the road, park one, use the other one. It costs what, $15 to swap the plates legally? And it's free to call the insurance company and change the insurance from one unregistered vehicle to a registered vehicle. Not that hard to do. And that's crazy, because that would only take 5 minutes. I don't have to put the second car in the shop. But if you're financing a car and your car breaks, now you got to bring it to the dealership and pray that they fix it under warranty. And if they don't, you got to pay extra money for it because you rent this bitch from the dealership, $600-700 a month. But if you own your car, you fix it when you feel like it. If you ain't got enough money to pay for the car that you drive, you could turn in a license plate to your local DMV, drop the insurance on it, and park that bitch until you get ready, and don't pay a dollar on it until you're ready to fix it, which saves you money. The old folks way of thinking is as long as you got a car, you got a house. Because if everything goes wrong, unless it's a convertible top, you could always live in your car. And that's why in some of the poor neighborhoods you see people living in their fucking cars. They can't afford to pay their rent, they can't afford to pay for a hotel, but they can afford to keep the insurance on that car and keep that car running. Y'all gotta think about priorities. Instead of trying to get a G Wagon or a Hellcat, y'all need to be trying to get you a car that costs $10,000 or less. Get you a $5,000 car. Go pick you up a car out the auction. What Michael's been talking over the past 2 months about how you could pick a car up out the auction for under 5 grand. You could ride around with it for 2 months and then put it up for sale and then get you another car. Then if you really want to ride around in nice cars, you could take the profits off the last car you sold to buy the next car that you want. You still never walking and you always got another car. It's there's other ways. Michael was also talking about estate sales. He's been talking about estate sales for the last couple months, where you can go to estate sales and buy stuff on the low and then flip it online and make money off of it instead of just selling your crap that might be all worn out. You can buy some dead guy's crap that's in really good condition for dirt cheap and then sell it to somebody else who thinks that it's really nice and turn a profit off of that. And that's a side job. That's literally less stress than being cursed out by your boss because one of your colleagues ain't working hard enough on the job because you're on a shift that's underperforming because the other people on your team isn't working as hard as you. You understand? So yeah, I appreciate Chris for coming to the show, but y'all gotta think about when I put this show up here, I put this show up here for y'all to succeed. Because y'all don't gotta do nothing. Y'all could make money off of my podcast and y'all could send me some money or not. I'm good either way. I'd appreciate it, but I'm good either way. The fact is, I do this for y'all. I do this because we do not have a society where anybody is teaching us how not to be broke. This is shit that we should have learned in like 10th, 11th, 12th grade. This should have been an orientation in high school. If I would have known that the 4 to 8% stocks that the 4 to 8% student loans that I was getting that I didn't need that I was wasting back when I was in college, I could have invested in stocks that would have given me 34% return every month. And a lot of my student loans would have been interest deferred until I graduated from high school. The 8 years I spent in college, I could have, honest to God, took that 60 grand a month, or not 60 grand a month, it was 60 grand a year because I was getting like 20 grand a semester and I was going to school year round. I was a career student and 60 grand a year. And I could have been putting that in stock options. In 8 years of that, I would have had more than $500,000 worth of student loans that would have been sitting there and then I could have took the principal, gave it back to the school as a tax deduction and kept the interest and would have been lovely. Would have been lovely. You know what I mean? But because they didn't teach this, even in business class, even in accounting, they don't teach this. They teach you how to count rich people's money. They teach you how to run rich people's businesses. They teach you how to go to college and get a piece of paper that says that you will make a great servant for somebody else who's already wealthy, who does not know half as much as you do, because rich people don't have to know shit. They just have to pay the smart people to know it for them. Think about it, every time you've looked at a billionaire or a millionaire and said, that dumbass, because they don't have to be smart at common sense stuff. They have to be smart enough to put their money on the people who have enough sense to tell them the right way to go. Or even better, because if you're rich enough, I don't even have to do this. I'm going to pay you to do it. I want this to be successful. You figure it out. I'm going to throw some money on the table, make it happen. Long as I turn a profit off of it, it's good. It's good. I just have to be a savvy talker because I could put money on a table, then I could tell 1,000 people that this is a good deal. Invest in it. You'll make a bunch of money off of it. They're going to give me all the money that I put on the table and some. And if this pays, they get paid. I already got paid. You see how the wealthy stay wealthy? But the rest of us, we won't do business with our enemy because we don't like them. We will stay broke before we work alongside somebody we don't like. I don't understand why it is. But I bet you Trump got some Tesla stock, even though they don't talk no more. Oh, so what up, Buster? He said, "B Rabbit." What up, Buster? Babs, how you doing? The bunny team. So this is some of the stuff that we think about, and this is some of the stuff that we talk about. We try to cover a lot of the ways that we can make and save money. So I want y'all to tell me if y'all been following the show. What do y'all think about the Zim stock? The stability of the Energizer. Y'all, we see Energizer commercials on a regular basis. We buy Energizer batteries, and we never thought to invest in Energizer stock. And one of the things that every expert investor says is invest in what you spend your money on. You buy Energizers over Duracell, and why don't you have Energizer stock? So there you have it. I gave you guys a trip across dividend landscapes for August so that you guys now know all the things that we're going to be getting ourselves into over the next 30 days. The rest of this week, we got other stuff lined up because tomorrow we're going to be talking about investing in Puerto Rico. We do a different country every Wednesday. Thursday, Friday, and Saturday, we're going to be giving you other ways to improve yourself. Sunday is our members only show that's open to the public right now with questions and comments. And it looks like we're going to be talking about between Monday and Tuesday of next week, investing using dividend only portfolio. And then the following week, we're going to be talking about investing in a growth only portfolio. And we're going to be talking about the difference between them. But we're also going to be either Monday or Tuesday of next week talking about the borrowing and the difference between cash loans, mortgages, and car loans with the financing so that you guys can understand the differences and why uh, stock loans, like cash loans against your stocks, is more effective for you in spending, which takes us to another scenario where wealthy individuals say that you should have 3 to 10 times more money available than the item that you're trying to buy. 3 to 10 times more money available than the item that you're trying to buy. If you want a $30,000 car, you need 90 to $300,000 available in your stock option in order to borrow the money to get that car. Now, if that $30,000 car is going to give you a variable payment of around $500 or $600 a month, you're going to want to have stocks that's paying more than $600 a month. If you're getting an average of 15% per year, where that's about $3,000 off of every $10,000 out of the year, you're looking at like uh, uh, upward of like $9,000 off of around 60 grand. So you really want to have more money than that because if you're trying to pay $600 a month, you're going to try to have about $1,000 a month coming back to you. So that means that you're probably going to be having something closer to $500, 500,000 to $1 million a month to go and grab that car. Otherwise, you're buying cash up front a $10,000 car because 10 times a $10,000 car would be a $100,000 car, which is easy to cover because a $10,000 car, a $5,000 or $7,000 car should cost you about $250 to $400 a month, depending on what kind of buy here, pay here you get it from. And with what we just showed you with the dividend rotation strategy, a $10,000 portfolio could get you $800 a month, which means half of that could go on the car and the other half of that could be reinvested into the stocks, or half of that could go on the car and 200 more dollars can go on the car insurance, and the remaining 200 could be reinvested into increasing the stock. So doing $10,000 dividend rotation could cover a $10,000 car. But if you had 3 times more than the car, you would have 30 grand that you would be in the stock portfolio, where you would do dividend rotation with 10,000 of it, but the other 20,000 of it would be a buy and hold, which means you would guaranteedly be making about $12,000 a month, not 12,000, $1,200 a month. And out of that $1,200 a month, you'd be spending $400 a month on a car, which is, what do we say? 3 times more than what you're trying to buy. 33%. Takes us back to what we were talking about 45 minutes ago. So if you're thinking like this, you're living like this, you're turning off all the unnecessary subscriptions, you're turning off all of the unnecessary memberships, you're stop wasting money on stuff that doesn't matter, you stop trying to entertain your friends with your capital. If they're not investing in you to turn a profit, you're not investing in them if they're not turning a profit. And then you start paying more attention on how you can transactionally make your life financially more feasible. Now, remember, we've gone from riding that wild wave with Zim stocks to the business side of Energizer Battery. We've explored the high risk rewards from the REITs like Arbor Realty, AGNC, and Orchid Island. We've given you guys some underground information for the U.S. Treasury bonds, and we did a showdown to provide the critical points of the biggest yields generated this month versus the immense cash flow from some of the other ones. And you still have to have the stomach to risk potential loss. We saw stocks like Zim that could generate nearly 4 times more cash than that of a stable company like Energizer. And we've also saw the powerful monthly dividends of Arbor Realty, AGNC, and Orchid Island. The most important takeaway that I want you guys to get off of the show today is successful dividend investing isn't just about chasing the biggest payouts. It's about understanding the business behind the dividends and matching your stock choices to your own financial goals and risk tolerance, which is why I was telling Chris what's happening over there is not going to mess with these trades. Every stock we discussed today could have a place in a portfolio, but they would play very different roles. So I want you to use the information to make informed decisions and always do your own research before you guys invest. Now, you can follow my lead because I do an extensive quantity of research before I come and talk to you about it. But peer-reviewed information, after I tell you, you go cross-check it and confirm that what I tell you is true. The only thing that might be different is the value at the time that you look for it. Because like tonight, it's almost 2 o'clock in the morning, Eastern Standard Time. If you go and look at the stocks in the morning, they will not be the same value as they are right now. But the difference between Orchid Island and AGNC will still be the same. The fact that Zim stock will still be over $16 a share will still be the same. The fact that Zim stock is offering 74 cents a share is still going to be the same. And you will confirm that the ex-dividend date is Saturday. So go check it out for yourself. Go see what you can see. And then when you come back tomorrow, we can start talking about investing in Puerto Rico. Now, that's all I got for you guys for tonight. I want to start off by saying, ladies, as long as the situation doesn't make sense, I'm going to keep asking you, ladies, to make it make sense. So, ladies, please make it make sense. Fellas, we're at around about 64% male following from the male perspective. We got more ladies coming to the show now, specifically because they're learning how to invest. I love a financially savvy woman. You have to understand, fellas, I do this for you to make you higher value men, helping you guys find ways to make, save, and invest money, increasing your resources. But you're not just a higher value man because you have higher financial status. You're a higher value man because you have a higher standard of expectations for yourself, which follows better decision making, emotional intelligence, and you navigate life in a more effective fashion where you're not making wasteful decisions after you've put all of this effort into making a larger quantity of estate for yourself. But As I tell you guys on a regular basis, ladies, this information is not gender exclusive. You ladies can become higher value women. Y'all can come and get the knowledge and information off of this podcast. Use it for yourselves, like I said earlier today. And in addition to that, if you're changing your decision making skills and instead of finding a guy that can spend the most money on you in a night, you can find a guy that has the best investment opportunities and the best strategies to make money for himself, where you can compare that to the information that you have, where you would be financially savvy, finding a financially savvy person where he's not wasting your money, but you have no reason to waste his money because you got your own money. And y'all can build a life together. Y'all can build generational wealth together. Y'all can teach y'all kids how to be financially savvy so your kids don't grow up dependent on your money or broke, which are two benefits that children don't have these days. We didn't hit the ground running when we were growing up. We got jobs to help our parents because our parents didn't have enough money. We learned how to work because we did not have enough to survive in our households. We learned how to work because we could not get the luxuries in life because our parents could only afford the bare minimum. So if we wanted extra, we had to get out there and go buy it ourselves. We said when we got older that we were going to give our children better lives. That requires us to make more money, work harder, so that we're absent in our children's lives, so that we can give the children what we didn't have when we were growing up. And all our children want, ironically, is for us to bring our ass home. Now, how are we going to do that if we out there grinding to get money? So I'm going to leave you guys with this. To get better work-life balance, put more money away for your tomorrow, invest it in ways where your money is making substantially larger quantities of money for you. Then the more money you make, the more you back off of your job. That way you can start working, instead of working 65 hours a week, you can start working 30 hours a week. You can start working 3 days a week, 10-hour days, so that you can spend 4 days a week with your family. If you got a wife at home and she's taking care of the kids, she's only got to deal with them 3 days out the week, because 2 out of the 4 days you got off, you can have the kids, which means you still got 2 days off. She still got 2 days off. And now y'all are sharing y'all responsibilities. Instead of packing your whole week into working yourself to death, your partner's packing their whole week into working themselves to death. And then you're both wishing that the partner would kick in for you to take some of the stress off your plate, but y'all got too much stress between the two of y'all. We need to change the way we do things. We can't just do like Blackstreet, take your problems and put it with my problems and we're going to work it out together. We have to find a way to dissolve these problems, eliminate them altogether so that you don't have problems and I don't have problems neither. So hopefully I see you guys for the rest of this week. I see you guys coming forward, because I know that this was an underground podcast for a long period of time, but YouTube started to like us and now we're starting to get seen more. So because we was in the restricted section where you had to turn off the restricted button in order to find us. Now we're actually more accessible. With that being said, I want to thank you guys for coming to This and That. I'm your host, Xander, where we talk about this, that, and everything in between. And I should be seeing you guys tomorrow night around about 11:35 Eastern Standard Time. So try to swing by and come and see what we got going on tomorrow. Thank you one more time. Have a good night.
Higher ground. Used to chase validation, now I validate That's my personal command. I'm not mounted on higher ground where excellence is found. My potential knows no bounds, raising the bar, breaking ground. I'm not just living, I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield to mediocrity and chaos. I will never I'm not just living, I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield to mediocrity and chaos. I will never yield.